So today I'm gonna talk about the return to order blocks trading strategy, and the way I trade this strategy is I divide it into 3 steps, and these 3 steps are very easy to understand, but you have to make sure that you do not skip any part of this video so that you can understand it completely. So I have broken it down into 3 steps. The first one is the break of market structures. Then we have to pay attention to the stop loss hunting in the market, and then after that we have to go ahead and find out the order blocks and apply our trade by putting the entry, stop loss, and take profits. The first concept that we need to clear is the break of market structure. If you are already familiar, then it will just be a revision for you, but the break of market structures are the structures when market breaks the previous higher highs or lower lows. For example, in this case, as you can see, this is a low forming, but when the market breaks this previous low, a break of market structure happens. Similarly, here we can see that previous low is broken, so this is another break of market structure, and here you can see all these break of market structures forming. So whenever market breaks a previous low or a high, as you can see in this case here, the market is breaking this high, so this is another break of market structure. So let's go ahead and find these break of market structures on the chart so that you can understand it completely. Here you can see the price action is making these lower lows. So every time low is formed, the market goes ahead and makes another lower low by breaking this market structure, and this has been happening in this downtrend for almost 4 times, as you can see here. So these are the break of market structures. Now let's go ahead and understand the stop loss hunting. Stop loss hunting is basically a technique where the institutions trigger the stop losses of the retail traders to create favorable conditions for themselves. And as you can see here, there are basically 3 patterns that you need to pay attention to if you want to identify if there is a stop loss hunting happening. So the first one is this broadening pattern in which the market makes higher highs and lower lows. So each time a new higher high is formed, a break of market structure happens, and when the market returns back within this structure, then this means that a stop loss hunting has happened, because initially what was did is it went up, hit the stop losses of retail traders, and then again went in the downward direction by creating enough liquidity for their big chunk of orders. Similarly, here you can see the market breaks this previous low, and then after giving a small move by hitting the stop losses, it then again moves in the upward direction. So this is a stop loss hunting happening here. Similarly, we can detect the stop loss hunting here as well, where the market is forming this kind of a support zone, but then market goes below the support zone for a very brief moment and then again gives a very impulsive bullish move. So this is again a stop loss hunting happening, and same is the case here in this kind of resistance zone where the market is getting rejected multiple times, but then it goes above this level for a brief moment and then goes downward in the bearish direction. So a stop loss hunting has happened here. So why are we understanding this? Why do we need to understand the break of market structures and stop loss hunting before learning the return to order blocks? The reason is these concepts will add confluences to our return to order block trading strategy, because if you trade the order blocks by themselves, then your chances of high probability trades will be very low. But when we combine these price action techniques, then we are basically increasing the chances of the order block working out. So now you have understood these 2 concepts, the break of market structure and the stop loss hunting. Let's go towards the live chart and then find out a trade of the return to order block trading strategy. So before we analyze the charts for break of market structure or stop loss hunting, first thing we have to do is we have to find out the overall trend in the market by looking at some higher time frame. As you can see here, I have zoomed out the charts. So in here we can see the market is continuously making higher highs and higher lows, which means currently here the market is in the bullish trend. So we should be in the favor of bullish order blocks because they would be complemented by this higher time frame bullish trend. So now once we have confirmed the overall trend in the market, let's zoom into the chart, and now let's start looking for our confluences. So the first one is our break of market structure, and then we have to look for stop loss hunting. So as you can see, every structure is getting broken. As you can see, market is breaking this structure, market is breaking this structure as well, and again market is breaking this structure. So there are a lot of break of market structures happening, and the reason we look for the break of market structures is to avoid the ranging markets, because in ranging markets, the trend is not clear. So we are not sure about which order block to trade. Should we trade the bullish order block or the bearish order block? But once we confirm the break of market structures, we know that we are in trending market. Next, we have to look for the stop loss hunting techniques. And here, as you can see, there are two equal lows forming, but then market goes below these lows for a very brief moment. So a lot of retail traders would have took this level because the market got rejected from this level twice. So a lot of traders would have placed their buy orders by placing their stop loss somewhere here. But what happens is market goes below this level because here is a support zone, then market goes below it for a brief moment, and after hitting the stop losses, the market gives this very impulsive move. As you can see, there are a lot of bullish candles, the 1, 2, 3, 4 big bodied bullish candles, which means that there was enough liquidity created for the institutions to make these big bullish candles. So now we have determined the break of market structure and the stop loss hunting. Next thing is we need to look for the order block, and as you can see here, we can see a clear formation of an order block here because there are 5 bullish candles and then a previous bearish candle. So if you are not familiar with structure of order blocks, make sure to check out my other video in which we talk about the order blocks in detail. So here is the formation of order block, and let me just repeat here. An order block is formed when there are continuous bullish or bearish candles in any direction. For example, here we can see there are 5 bullish candles, and before these 5 bullish candles there is 1 bearish candle. So this bearish candle would be our order block, because in market structure terms, this structure would have looked like this. As you can see, there was a ranging structure, and then after that something happened, and that something is basically the institutional activity. So market gave this bullish impulsive move, and from here the trading strategy is the market would come back and then again move in the bullish direction. So let me just draw order block at this candle. So we're gonna use the rectangular tool, and this rectangle is basically the order block forming in this scenario here. To detect order block zones automatically on your charts, you can also use our order blocks detector indicator. So let's go ahead and apply the indicator, and as you can see, I have applied the indicator, and now once we play the market, the indicator will automatically detect the order block zones on your chart, and it will also notify you in real time. You can find the link to this indicator in the description of this video, so make sure to check that out. So now what we would do is, once we have identified a bullish order block, we would place our entry at the high of this zone and our stop loss below, somewhere below this low of the order block. So let me just go ahead and place our order. And first thing is we should be targeting 1:1 to break even the trade. And now let's forward play the market to see how the market behaves. So as you can see, the orders get picked, the market comes back, and the order gets picked. And then once we reach the 1:1 restore ratio, as you can see in this candle, that has happened. So we would break even the trade. We would move our stop loss from here to the entry level, and then our take profit would be the previous high level. You can use any strategy to decide your take profit level, but in this case here, I'm just gonna put our take profit at the previous high. So let me just go ahead and power play the market. So as you can see, the market does hit our take profit level. So this is the way to use return to order blocks in your trading strategy. And I hope you like the video. If you have any questions, please comment down below and I would love to answer them. Also, don't forget to subscribe and check out our website forexb.co for more price action guides and tools. Thank you.